All right, so I wanted to share a video on this strategy that I'm learning, or not so much strategy, but at least what I tend to look for whenever I'm taking trades. And I find that whenever I'm working on a trade, this always tends to work pretty well, and they they tend to I tend to find really good gains with them. The issue is sitting in front of the computer and letting the trade work. So I'll give you an example. This is Verizon. Verizon had news today. I think they gapped up on earnings. And just looking at the chart, this is a 5-minute chart. So if we look at it from the 30-minute chart, so there's obviously this action and it's in a downtrend, but clearly there's been a shift and everything is moving up. I reckon we may have some sort of resistance round about here, sort of halfway between here. But anyway, besides the point, what I tend to look for intraday is, well, I wouldn't have taken this trade today because it just doesn't fulfill the criteria that I generally look for, which is the VWAP on top of the MVWAP. The MVWAP is just the moving average of the VWAP, a 50-day moving average of the VWAP. So it's just an average of the VWAP. And I prefer to take it when the VWAP is above the MVWAP. Okay, anyway, so, but if say this was a trade I wanted to go for, on the 5-minute chart, I love this sort of red to green move. I generally would follow the trend like this. And when you have this break, then I would sort of get in. Sometimes I use the RSI to kind of figure out whether this is a reversal. This isn't really giving me that indication. But this is normally what I would go for on the 5-minute chart. When there's a reversal, sometimes I would wait till the VWAP is broken before I get in. And when the VWAP is broken, I get the impression that, okay, this is safe to get in. So I may just kind of take the trade from here, put my stop at the lowest point of the day. And then now aim for usually a 2-to-1. And as you can see, within the first, this is 5 minutes, 5, 10, 15, 20, 25, 30, 35. So within the first sort of half hour, you would have reached at least 2-to-1. If you wanted to stomach it, you could take this all the way to the end of the day. And right now it's on a 4-to-1 so far, and it's done really well. Normally what happens in my case is I would stop out. Here we go. I would get the 2-to-1 at this point, get out here. And then if I see this wedge forming, even though this would have stopped me out, I would get in again at the break. Typically, I put it at the base of the wedge, which is why I say I would have been stopped out here. And then aim for, a 2-to-1. I normally risk about 100 or something, but as you can see, this would have stopped me out. Another risk parameter would have been here, but yeah, this one wouldn't have worked. CCIV was another example. This one, you would have to wait hours to see this develop, but this is kind of how CCIV trades. Tempting to do that, but really this is what you want. It does this all the time, every single day almost. It does this long consolidation and then explodes in the middle of the day. It's done the same thing over here. I probably would not have waited this long, but if I saw this coming in and out and it's making higher highs and higher lows, this would have been a good entry point, and risking this part. Again, this is not what I would normally go for. Normally I would put my stop here after this consolidation is over and go for a 2-to-1. So maybe just head for this. That's usually where I would get in because of this consolidation here. If I want to be conservative, go for this lower point, in which case you are going to go for here. Here you go, another 2-to-1 right here. But again, you just don't know because it's at the highs. There's a supply region over here, so you've been consolidating for at least half of a day, one day if you take this half day. So at least this is going to take a lot of it, and then you can see the volume as well. So this should really start heading up. But that's one idea. Same thing with Tesla. And it's sad looking at Tesla today because of the fact that I was fumbling in this point, and only fumbling because I wasn't focused on my approach. I was just really scalping, and scalping is never usually a very good way to stick to your convictions, because you enter with such huge size and you're trying to catch the bounces and you don't really know what you're doing. But here we have a really nice demand region that's formed. I'll just make this a real nice green here. So you have a really nice demand region here, because you can see how price aggressively have come in here with all this volume and it gets bought up. Look at the candle that's formed. You have this candle formed, and of course when it revisits, there's no surprise that it's rallied. Now in this situation, this would be your risk. You could take it from here or wait for the first pullback. I normally like to take it from the exit, because for me that's already conviction that this is a trade. So I would put my risk here and then aim for 221, which is maybe the VWAP will be my first target, and then get about here. And then at this point I start to manage the trade. And essentially what I mean by that is I would take out half my position here. So if it's asking me to enter 72 shares, I would reduce it down to maybe 30 shares. And then when it crosses each level, I add 10 shares. Gets here, crosses another level, maybe here, add another 10 shares. And in each time I'm moving my stop. So let's say the stop is here. At this point, at 221, my stop would now be here. Okay, so this would be my new stop. Whoops, a daisy. Let's just do that one more time. All right, so this would be my new stop. And then after the consolidation, moving up again, I would then now move my stop here to the base of the consolidation after I've added 10 shares. Let it consolidate with the next one. Once it breaks the consolidation, I move my stop to the base of the next consolidation, just here, and add another 10 shares if I can, and then just keep managing it, rinse and repeat. I can just keep doing this instead. Oops, no. Okay, Control V, Control V, Control C, Control V. Oh, I can just do this. Clone. Yeah, and then just move, oops, and then just move my stop here. And then once it's broken this consolidation again, keep the stop over here. Do I have, yeah, there we go. And now we just move our stop, and then maybe just add another 10 if we can afford 10. So we would have taken out 40 here. Well, actually, we would have taken out 40 here, moved our stop over here. And then at this point, once it breaks, add another 10. So you'd have 30 at this point. So you'd have taken out 42, add 10 here. So you'd now have 40, break this, and then just keep moving. And then at this point, you add another 10. So you now have 50, and then here 60, and then wait for this to break. So this is where you would have 60 shares. So you can imagine right now you're making good gains as you're getting up, and you're moving your stop each time. So this is your final stop at this point, and you're close to the close. So I will be looking to close the position at this point. That's how you manage the trade, by just moving your stop, because you're already in profit. You can't, this trade can never go green on you. And as you're adding, you're only adding small amounts. So even if it reverses on the small amount, you still have a lot from the previous to cover you. So yeah, this trade will never ever go green on you, and you're adding each time as you're going higher. So even over here, even if it hits your stop, because actually you've not added here, you added here. So you're always in profit, even on every single add that you have made. Let's say, for instance, now you had the unfortunate situation here where you added here and then it hits your stop. You only lose on the 10 shares that you've added. Now 10 shares, you've already made 2 to 1 on this point. You've added here another 10. So you're just making just this much. Yeah. So you've made at least here, if your risk is say 250 in my case, that's $500 plus the 10 shares that you've added there. And yeah, I don't know if, yeah, I know I've added, yeah, plus the little, yeah. So you would have definitely made something from this point. Let's see if there's another example. I think everything else just kind of all this. This is a bit too choppy, but obviously in hindsight, I'm seeing it this way. Now, how would you have traded this? The zone for the demand zone is here, and I choose the first pullback, and so this would have been my risk. Again, same story. Risk here if I was using Facebook, and this is just really, I mean, again, I wouldn't have chosen this to trade today, but if I were just getting in at this point and risking the base here, so I would need 609 shares. I doubt I would have played 609 shares. Maybe pull down my risk a bit to maybe 500 shares. I think that's what I would have entered with. Maybe about 500 shares, and then aim for a 2-to-1 risk reward ratio here, there. Of course, I mean, I'm putting in a bit less, but this will be my, and in fact, I would probably even aim for the VWAP because you're expecting price to head back to the VWAP. It's a bit flat anyway. And then once it gets to the VWAP, then you start adding and removing. So here it's come back to the VWAP, you probably get stopped out here because this is where your stop is. But if you decide to hold, you can just keep riding it. And then here you would add one more at this level because this is a new level. So just let's do that now. All right, so you've taken out maybe half your position here, and then now you're adding when you get there. This is 2-to-1. Yeah, so you've taken out half your position here or wherever at this point. Okay, so yeah, take half your position here. So you only have 250 shares at this point. Now you move your stop to the base of the VWAP. So that will be my first, where my stop will be. Clone. Right? And then just keep going. Then now it's broken this level. You move your stop. Let's actually give this a different color. Let's make this green. So now you move your stop to maybe about here. So since it's broken already, oh, actually, no, I'll move my stop a bit higher. Clone, there we go. And then just kind of keep your stop here, and then just keep it going till it breaks here. And then you now add another 100 or 50 shares at this point. And then you're now going to move your stop here. Okay, so this is where your stop is. You've added 50 shares. Your 50 shares have reversed on you, but you remember you're still in the trade, so you keep your thing with the stop in, and then your 50 shares have now broken even, or at least not 50 shares, but the more you've added, yeah, the 50 shares. And then now you're looking for price to break this to add more. So at this point, let's just put this here, and why is Control V not working? Yeah, oh, actually, maybe it's the Alt key. Let's try that. No, the Alt key doesn't work. All right, so anyway, I used to be able to do that. I can't seem to remember how to do it. Clone. All right, so you have moved this is your breakpoint. This is where you enter the last one. And now you're waiting for this level to be broken. So you then clone one more time. Clone. See, I probably would have gotten out here because I would have, I mean, it's easy to say this in hindsight, but I probably would have gotten out here only because I'm looking at the time. I'm seeing now we're possibly making a lower low, but this is why the stop is here to see if we are making a lower low. Yeah, now we're trying to see, now we're pushing up, and let's see if price will break this. And if price breaks this, we keep our stop here, but now we add again that 10, we add more to that 10, and we may put our stop here. This is where we're looking to put our stop, the next level. And this is how we would trade Facebook based on this reversal till this point. And we just keep staying in the trade by moving stops in and making sure it doesn't go red on you. Same thing here. Everything is following this thing. So let's actually just pick a random day. This is actually a good one because you have a good setup here. And this is all about being patient. So you can see price is moving from in this range. Again, in hindsight, you can see this. At the time, you're not expecting this drop per se, but if you do get this drop, the reason why you would is because of the supply formed in this region. So because there is supply in this trade somewhere here, just following the wick, let's make this red and the body red. So you're following this here, so you definitely have supply, and there's probably some supply from the past over here somewhere, or even over here, but this confirms it. So here I would probably push it to the body, just about there. Now we have seen it reject the supply zone. It's retesting this new supply formed, and now we can now put our stop at the base of this and get in either at the VWAP or get in somewhere here and take a short. Unfortunately, you wouldn't be able to. Let's actually see if we did do a short and we got in here based on this imbalance, put our stop at the top there. We're going for a 2-to-1. We've already hit our target. So at this point now, we just follow it, and then and this is another question, is where do we get out? So if we put this, let's just put this here for now. First of all, I don't think I would buy 1,240 shares of NVIDIA, of AMD with 1,000 shares. No, I don't think I have that much buying power. So I would just take maybe 800 shares instead. So if we move it to about 800 shares, so we're looking for this. This is where we're after. And then now we take half our position out, we move our stop, and then just follow it. And our stop is now at the top. So I think ideally we would have been stopped out here, which is a shame, because if you move it all the way here, you get 3-to-1, right? But it's just how trading works. All right. Yeah, so that's literally how this works. Here's another really good setup. Let's change this to red. I like this setup over here. Entry here, again, hindsight, easy to see these things, but this is something I would be looking for, because you can see a wedge forming, and then kind of forming a base down here. This is a fake out that would have caught you, but because you're long bias, you probably will not have taken this. And then you see price coming out, you put your stop down here and you get in here. So you go long, getting in there, put your stop at the base, and you're aiming for a 2-to-1 there. It's so funny how whenever these setups happen, you almost invariably get a 2-to-1. And then you have price coming in and coming back out. At this point, you put your stop here and you stop out. And you can see this happening again. So this is something I would watch out for when I see price doing this, but then I also see it's beginning to wedge, in this case, like this and like this. I would be looking for this point. And of course, this point would come as a result of what's happening over here. I guess this is resistance, or if you want to argue and say it's supply, but again, what's happening over here? I think this is resistance, because this is the level. So I will probably not put this here. I would look at it as a point of demand, but it's just so high up, I would probably just call it resistance. This also is a great, this is supply here. So if we, not supply, sorry, demand. So if we take this down to this base and then change the color to green, that's a bit too strong a green. All right, so now we just take it from here and we're up again, and then we're getting another 2-to-1. You see, this is the thing, once you have decided what you are trading, it always works out well. You just get, look at that, 1,000 shares. I probably again will not do 1,000 shares. I'll probably go 800 one more time, and I probably won't even do that many shares because my risk will change. But it's not so much the number of shares now that matters, it's the risk reward, and this is what we're aiming for. In fact, I will probably still play 100 shares, but still keep my stop, not 100 shares, 800 shares, keep my stop loss over here, because this is the point where the trade doesn't work. So you just don't need to hold on to the trade at that point. And look at what you have. 2 trades in one stock in one day, possibly $2,000, $1,000 in just one stock. So patience is key. You can see how they make these swings. You just need to find a stock that fits your thesis and trade it accordingly.